Well, top of the morning, Southern Oregon, and welcome back to the Real Estate Show. So glad you could join us today. We're going to be interviewing Guy Giles of Mutual Mortgage for his monthly update. Guy comes on the show every month and brings us up to speed of what's going on in the financial worlds and also how it affects Southern Oregonians for buying and selling houses, which is what it's all about, right? So Guy Giles will be coming in shortly. In the meantime, let's check in with all three of our local counties, Jackson, Josephine, and Klamath, about the statistics for this week. Jackson County prices this week year over year were about neutral. The average residential home in Jackson County costing $485,551. So neither significantly up or down this week. Number of sold year over year in Jackson County were up by 22%. We had 61 closings on Jackson County's residential market this week on SOMLS. Number of listings year over year in Jackson County residential were up 15%. We've got a long streak here, folks, of double-digit increases in inventory. Jackson County has 860 active residential homes on SOMLS this week. Josephine County prices year over year were also neutral, not significantly different from last week. The average residential home in Josephine County costing $425,042 this week. Number of sold year over year in Josephine County this week were up a whopping 91%. And now remember, this is year over year. This time last year, there were 23 closings in Josephine County this week in the residential market. Number of listings year over year in Josephine County were up 15% this week. We now have 407 active residential listings on SOMLS in Josephine County. And again, continuing the double-digit trend, weekly trend for increase of inventory. Let's check in with Klamath County now. Klamath County prices year over year are up 5% this week. The average residential home in Klamath County was $302,000. Number of sold year over year in Klamath County residential were up a big 108%. Now remember, this is this time last year comparison. So we had 25 residential closings on SOMLS in Klamath County this week. Number of listings year over year were up 29%. Oh my gosh, 365 active listings on Klamath County residential market for SOMLS. So you can see, folks, the inventory is moving up every week compared to last year, which is great because we need it. We will hit a neutral threshold at some point, but right now we're still shy number of houses compared to the buyers. And it's been a real volatile market this summer and fall. And we still have more buyers than sellers. So if you want to sell something, maybe now's the time. You won't have very much competition, especially compared to next spring. So right now, let's welcome Mr. Guy Giles into the studio to talk about this week. Well, Guy Giles, thank you so much for coming back. Good morning.
Hey, good morning. Ready to talk about what's going on, I guess, in our lives with the real estate market. Glad to see we got a weather change. Keeps moving in. Football, the Ducks are doing well. So it's a pretty good week right now.
Yep, everything's good in the world. Well, we appreciate you joining us today, especially since you're calling in remotely. What are you doing on the road?
We're just going to go deliver some coats to some local grade schools today. So
yeah,
got my truck
fantastic.
And beds all emptied out.
Okay, well, so, thank you for taking a quick break to talk to us. Coats for Kids.
Yes, it's a good. I think it's kind of over for this year, but it's a great program for next year.
Well, and you are quite the volunteer. I remember when you were in Mexico earlier the year, so we really love that about you.
I'm pretty mean during the week though, so kind of makes up for it a little bit. I'm not that nice of a guy. You just keep catching me at the wrong time. That's all.
That's too funny. Well, speaking of a mean week, we had kind of an interesting situation this week with the jobs and how the market reacted. What does that mean for Southern Oregon housing?
Well, I mean, if you looked at it more in the long run, there are it it is so funny. I feel like I'm always giving these mixed messages, but overall, if you bought your house in 2019, you're you've probably gained about $158,000 just as a national average. I was looking at some numbers,
Wow.
and which sounds insane, but in the last 6 weeks, you've lost about $33,000 in purchasing power. And what I mean by that is it's still a good time to buy. I mean, there's just not enough houses. And the people that jumped in when maybe they didn't think was the right time to jump in have a lot of equity in a house that otherwise they would not have had. And with these higher inflation, which we've had, and it's been pretty sticky, um, if you just have money sitting around in an account getting a 0.5% or a couple percent, even if you're getting 12% on it, to have that appreciating asset of that house that is, say you're putting 20% down, that's 5 times more than whatever you'd have in that account overall, works out really, really well for you. Um, so when you kind of ask about what's going on or what's happened in the last week or, week and a half, we've had a big number for jobs and whether or not they're going to reconcile those numbers at the end of the year,
Right.
we're dealt with what we're dealt, and the headline is the headline. So rates have gone up a little bit, and the average person lost about $33,000 in purchasing power in the last 6 weeks. So if your payment was
Wow.
$100, now it's more. So people, it's knocked some people out of the market. I'm getting a lot of
Again.
people. Yeah, I'm getting a lot of people right now that are really close, you know, that if rates were 0.5% lower, it would make the difference in getting in that house that they want or not getting in that house. But, if you're in that position and you're not selling a house that you got a whole lot of equity on, I think just getting into a house right now is a good idea. It doesn't have to be your forever home, but it could be a rental or something down the road. And again, just another way to create some wealth.
Yeah, and that's an interesting suggestion because um, people, when they're buying their first house, they don't always think of it being a temporary situation. And what you just said makes it possible to go ahead and get in the market now instead of waiting for your dream home.
I think if you can, you can. I've told the story about my axles and tongue on my first place, but I did make money on it. It was on land, and that enabled me to get my first stick built house long, long time ago, probably before most of you were born. But it's in the long run, it's always served me really, really well.
Well, and that's part of what we love about having you on the show is you always have great ideas, different perspectives, and that helps people come up with a new strategy to keep moving forward even when the rates went up.
Yeah, and then just from the strategy standpoint, I've gotten a call from a construction guy that owns a company this week, an attorney moving up here from the Bay Area, um, both of which, we may end up having to do some bank statement loans. So when you talk about like getting creative or doing different things, there are a lot of different programs that the traditional banks don't offer at all. And you might think that you can't buy a house or a family member can't buy a house. And actually the rates have been on a lot of these programs have been really comparable to the regular rates. So
Oh, that's
I don't know.
good.
I guess if you've been turned down because your FICO's 300, it's a little different than you've been turned down because you're self-employed and you can't show that on taxes. But either way, just
Yeah.
having a conversation with me is not a bad idea. I've got Trent in my office also. You know, he's really good at helping solve problems. Our whole team is. So, uh, I don't know. There are people getting financing right now that probably didn't think that they would be able to not that long ago. And we're doing most of these programs in-house. So I'm not at the mercy of some broker, sending it out to New York City that, you may or may not hear back.
Yeah, that's been a very difficult situation with other lenders. And they don't always tell you that they're doing that they're sending a brokerage package out to a different lender.
Yeah. Yeah. And we do broker some stuff. I actually try not to. If I can't do it in-house, I try to avoid it.
Well, and you
But
have in-house.
yes, we do have in-house. And
Is that kind of recent? The in-house?
it's been about 6 months, I guess.
Okay.
We've closed a couple of them in-house, and
Uh-huh.
they've actually worked out really, really well because we just don't lose control of any piece of the process at all.
Uh-huh.
So Cassie, my partner, she came to me and she's just like, this is the only kind of loan I want to do, because we just turned in a lot of bank statements, pulled a credit report, and we were ready to go within a couple of days. And it was pretty amazing. So anyway, I'm out trying to find her some more of those because she loves them.
Well, and she's a great person to have on your team, as well as Trent.
Oh yeah, yes. But anyway, not to, I guess, digress too far. The rates are still better
We've
than
got a
they
lot to
were.
talk about.
Yeah, they're still better than they were not that long ago. So, I don't want to get negative on this at all.
Okay, well, we're going to have to take a quick break. So we'll say thank you to John L. Scott, Ashland, and Medford, the local RVAR, Rogue Valley Association of Realtors, and you, Guy Giles, Mutual of Omaha Mortgage, for sponsoring our show every week. We really appreciate you. We're going to take a quick break now, and we'll be right back, so don't go away. Well, hey, Southern Oregon, welcome back to the Real Estate Show. We have quite a treat today. We're talking to Guy Giles of Mutual Mortgage, and he's one of our sponsors. So he's actually talking to us from on the road because he's doing another volunteer project today. So thanks for calling in, Guy.
Hey, it's good to be here. So
Before the break, we were talking about bank statement loans and how you do them in-house. You're not brokering them like some people do. But let's back up a little bit and maybe explain to people what a bank statement loan is and why it might come in handy for them.
well, if you're making a lot or there's a lot of money coming in through your company, but you're not necessarily showing it all on your taxes. And I'm not talking about tax evasion or something like that, but let's face it, it costs money to run a business, and that's one of the advantages of the way the tax.
If you have your own business.
Yes,
Okay.
for self-employed people. And if you have $1 million coming in per year, but by the time your accountant's all done with it, it only shows like $70,000, you may not approve for a home loan. But this goes back a little bit to where the kind of inception of the stated loans were, where a lot of these loans, they called them liar's loans, they called them things. They were designed for self-employed people that could qualify for a loan, but didn't necessarily show everything on their taxes.
Oh,
And
gotcha.
then they opened it up to everybody. It crashed a lot, crashed a lot of things in the past. And they haven't gone away from, at least this time around, they haven't gone away from kind of common sense stated loan stuff. So it's not completely stated. We want to know that you are getting those receipts in. We're going to probably take 50% of those receipts out right off the top. So it's not like it's not a sloppy loan like we did in the past back in 2006, 2009 when everything crashed, but it's just a means for another segment of people to be able to get into a loan without without having to show everything on your tax return.
So for self-employed people, whether you own a plumbing company or you're an anesthesiologist, if you're self-employed, then this is the kind of loan, stated income, that can help you buy a house.
And let's be honest, most anesthesiologists that I've done loans for, they can qualify just fine. without any,
Well,
without
and
any
actually
help.
lately, talking to the plumbers, they can too.
Yes. You know what? That is true. If you got a kid that's laying around on the sofa that doesn't really know what to do, have them get a hold of the Home Builders Association, and there's probably a good path to a decent career in anything construction right now still.
Yeah, Brad Bennington from the Southern Oregon Home Builders Association always says every time he's on the show that they do have a shortage of skilled labor and they're willing to train.
Yes. Yeah. I've seen a lot of these young guys, and a couple girls, which is kind of cool to see come in over the last couple of years that started out just in a little apprenticeship, worked for somebody for a few years, got to know what they were doing, and now they're running their own companies. And that's what this whole thing's supposed to be about. So
Yeah,
hopefully we'll
that's
see more
very
and more of
cool.
that.
Yeah, very cool. So let's talk about the young entrepreneur that does start a business on their own and meets with some success. Um, how many years of tax returns or history with the company does a person need so that they can qualify for a home loan?
Well, there's a couple of different things. When you say history with a company, if somebody's been basically you're looking at 2 years, no matter what. But if you were to take over a company that you've been working for, it could be a little bit shorter than that.
Oh,
If
that's
it's a
good.
well established company. But for the most part, these guys lately, at least around me, have been just starting out, a couple of years ago.
Hmm.
I also I try to have the dad conversation also. I want to make sure that
What's the dad conversation?
well, that business is going to pay for the house, because a lot of times I'm having them come in and they've had a little bit of success in the first 6 months, and they think they're ready to conquer the world, and they haven't done their quarterly taxes yet, and they're making a ton of money right now. But I just like to have a conversation with them, and there are downturns and upturns when it comes to running a small business, and just making sure they have some reserves, and they're really prepared to buy the house, beyond just the work history as far as that goes. A lot of people didn't have, not a lot, but people didn't have those conversations with me when I bought my first house, and I made it, but it was a struggle, a couple of times. So, you also want to make sure that it's the right time, because that business is what's going to pay for your house. And, you want to make sure you're establishing that and not taking away from your business in order to buy that house too early.
Not stressing out your whole financial picture. So that's one of the great things about you, Guy, is you're not just a lender there to slap together a loan and send them on their way. You actually take the time to talk to them and set them up for success for a lifetime of wealth building.
That's kind of the goal. It's just fun to watch, especially now that I've been around for ever, basically. At least it feels like it. I'm seeing kids that did start out at really low paying jobs, and now they're running their own companies and doing really well. And it's nice to see them go about it in the right order, the right pace.
Well, like you said, you didn't get that kind of long-term advice at the time, and luckily it turned out okay. But you make a point of talking to every business owner, not necessarily just the young ones, to
Hmm.
help prepare them so that they're successful with their home purchase down the road.
Yeah. Yeah. I've been pretty blessed to be in this business, to be able to, see the fruits of a lot of people's hard work in their house. So,
Well, and it speaks
um,
to the attitude you have to your own business that you go the extra mile for these people, especially when they're just starting out.
but yes, yeah, it's been pretty good. The markets can be frustrating. There's no doubt about that, but you can
Yeah.
only control some things. And, um, you know, it works out in the long run. Right now we've been just going through some stretches where everything seems like it'll be okay for a minute, and then rates pop back up. And
Well, and
then,
that's what just
but
happened, right?
it did. It did. And it happened again on Friday. Um, some numbers came out on jobs, and the stock market still went crazy. I don't know if people are thinking maybe some of this, this thing settled as far as an election goes. We'll know in a few days, but everything's affecting the markets.
It's very reactionary. And
Yeah.
it's not always responding. The stock market's not always responding the way we predict it's going to. Because normally
No,
if you get bad news on a job report, the markets go down,
I know
not
you would,
up.
you would absolutely think that, wouldn't you?
Yeah.
We're
So
in some uncharted territory right now for sure.
yeah, and you
But
just can't make it up. And sometimes the home buyers don't quite understand that, especially if this is their first go thing.
yeah,
But boy, they're really cutting their teeth on this volatile market, aren't they?
oh my gosh, they are. But we got to go back to, like I said, 2019. It's $156,000 on average that people have gained in equity in their house. So
Nationally
even
in
though,
equity. Wow.
yeah, yeah, and I
Oh,
mean,
that was
obviously
just
you're,
5 years ago. Sorry.
yeah, no, and you're lumping in Arkansas with New York, so it is an average, but I don't think there's any place that houses are worth less than they were then. And there was a lot of people probably saying this isn't the right time to get in. So if you can afford it, not a bad thing to do.
Well, and it was kind of funny. I was talking to somebody last week, and when we're doing the micro discussions about what's just happened with our prices in the last 30 to 90 days, some of the neighborhoods are still down. And so we had to stop mid conversation and put it into perspective that this is just the short term, it's a short term dip. So when you're talking to people who are lining up to sell their house to buy a new one, what does that conversation sound like? Because
Well, it
you're,
usually sounds like on my end, it usually sounds like I have a 2.6% rate. What are you going to get me now? And I'm like, double.
wow.
If you're lucky.
Yeah,
But but then, like I said, we just have to go back to the fact that they've gained a lot of equity in that house, and we wouldn't necessarily be where we are right now if things hadn't appreciated. And
that's
we're still
right.
talking, if we're talking 2.6% rate again, then that means you didn't really probably have a down payment out of the sale of your old house. Or, if you're fortunate enough to be able to make this a new primary residence and get out of that old house and turn it into a rental, now you have a really low payment, comparatively speaking. And so there's a lot of different conversations we can have with these people.
Well, and the point is that the volatility we're experiencing can be bridged by the fact that you have so much equity, and that helps smooth it out, right? Welcome back to the real estate show, folks. And now we're going to get back to chatting with Guy Giles, Mutual Mortgage, who's on the road doing volunteer work again for Coats for Kids. So thanks for calling in this morning, Guy.
It's good to be back.
So before the break, we were talking about not only the stated income process, but also how much equity people have and how that helps them prepare for the higher interest rates. Can you talk about the mathematical sequence? If you have a lot of equity, like we were talking about 150,000 of equity since 2019, but you have a 2.5% mortgage rate, interest rate. So how can that 150,000 be used as a down payment to help your payment be a little bit more palatable? So let's talk briefly about the mathematics of having a big down payment out of a house that you bought before, even though you have like a 3.0, 2.5% interest rate.
Yeah, being on the road, it's going to be hard to do a little bit of that math. I tried to,
But
if you,
just in generalities, yeah.
well, if you looked at that $150,000 and say you were borrowing that at 7%, that's
Right.
probably about $1,300 in a payment that you wouldn't have otherwise had. Or I guess I kind of said that backwards. If you didn't have that down payment, that $150,000 that you're putting down would make your payment about $1,300 less on your new house.
Wow, that's
So
significant.
yeah, so the difference in having that or not is definitely a big deal. Now, maybe you leave that in your rental property, and now you're making more money on the rental property, so that can offset the cost of your new house also. So there's just a lot of different ways to look. It's not always the right time to be a landlord. Sometimes it's best just to sell the house and pull the money out of it. Or if you have a decent credit score and only 5% down, mortgage insurance isn't expensive like it was.
Yeah, it was really high before.
Yeah, it's definitely I don't know if they've just kind of got in competition with each other or what, because when you say mortgage insurance, that doesn't mean necessarily just one company. There's a whole lot of them running around out
Oh,
there that are
gotcha.
competing for each other's stuff. And if you have a decent FICO score, they're realizing that people aren't usually defaulting on things, so they could get a little bit more aggressive, which has actually helped our side a little bit when the home loan rates are up. If somebody only has they'll be shocked to find out their mortgage insurance was only $40 or $30. I think I've seen it as low as $23.
Wow, that
Um,
is really low.
and then that's not 3% down, but if you have a good credit score and 10% down, it could be relatively cheap for mortgage insurance.
And just for those who don't know what mortgage insurance is, can you just explain a little bit about what that's
Yes,
for and who gets
historically.
the money?
Well, insurance sounds like, oh, great. If something happens, this will help me. But that's not really the case. If something happens, it'll cover the bank as far as that goes. But historically, anytime you've had less than 20% down on a home loan, unless you're doing some different kind of creative financing, you have mortgage insurance on the house, and it stays on the house until you get to 78% loan to value. That said, if, after a couple of years you're in the mortgage insurance, you could look at getting an appraisal on your house and getting out of it a little bit earlier. Obviously, banks and mortgage insurance companies, they like that extra layer of security as an investor. So, they like to keep it on, but there are definitely tricks and ways to get out of it a little bit sooner. But really is all it is to do is somebody with 5% down is a lot more likely to default on a loan than somebody with 25% down. So
Gotcha.
they have that is just, it's a little extra layer of underwriting. It's just a little extra layer of protection that um, and actually I've seen sometimes home loan rates are a little bit lower if you have mortgage insurance on the place because of
Oh,
that added
really?
protection. It sounds
Huh.
weird, I know, but I haven't compared it in probably a couple of years, but we were seeing that for sure a while back.
And what's the down payment to avoid? How much is the down payment to avoid mortgage insurance?
Three, well, 20% as far as that
20%
goes.
or
Yeah.
more.
Yes. So again, if you're piggybacking a second mortgage or, doing something different, or a VA loan are really nice that um, never have mortgage insurance on them. But, it's not the end of the
Wow.
world these days to have mortgage insurance on your house.
So that VA scenario is very exciting because what you just said was you could have a big down payment, use your VA benefits. The VA program does not have mortgage insurance. And don't the VA program participants get a lower interest rate?
Yes. Yeah. They,
Wow.
they do kind of comparable to FHA loans, but FHA loans pretty much always have mortgage insurance on them. And when without a decent down payment, you're going to have that mortgage insurance on there until you refinance out. So VA loans are a great option. I had one literally last night where they're not married yet. So if they buy this house before they get married, the husband's going to have to cover his part of the VA down payment. The wife's will be covered by the guarantee from the VA, but that's probably getting a little bit too far into the weeds, figuring, talking about that right now. But it's a great program if you're eligible for it. Another thing that we've been seeing some lately is they've opened up VA loans to be assumable to anybody.
Really?
And
Not just veterans?
yes, yeah. Now you can't initiate one
Wow.
without being a veteran, but you can buy a house that's on there. Um, the only caveat is the last one that I did. The people only wanted a $150,000 loan. The guy actually was a veteran, but they were looking at assuming this loan, and the person that had a loan on the house was over $400,000, and the VA will not allow you to recast a loan. So
Oh, okay.
maybe come in with a principal reduction payment and then lower your payments. So they opted to just go with a regular loan because they had a huge down payment. The guy, again, I can get into the weeds. The guy, if you don't have Service Connect disability, there's some fees with it. So it's just good to kind of come in and talk about the ins and the outs. And in their particular situation, it made more sense to not do a VA loan, to just do a conventional loan on a smaller amount. So just a lot goes into all this stuff. And thankfully I have Cassie to help me out.
Well, and again, that's part of the beauty of going through you, Guy, because you have all this expertise and you can literally sit there with a person who's getting ready to borrow money to buy a house, and you can go through all these scenarios. And a lot of lenders can't do that. They just have the one thing that they do, but you have really a wide breadth of options for people.
Been doing this for a long time, so we can solve a lot of problems sometimes, well, a lot of times that, were referred over to us from a bank that can't necessarily troubleshoot these. There's some good lenders and some banks around here,
Really?
don't get
So
me
you
wrong,
get
but
referrals from other lenders.
absolutely. Yes.
That's great. That's
So
great. Well, it
yeah,
speaks well.
you gotta get it where you can take it. But if we can help somebody get into a house, and just have an option that they might not have, they're trying to do what's right for their people too. And one thing they like about us is we're not a depository bank. So we're not going to be going after that person's checking accounts after anything. So they know is all they're doing is really helping their client. They're not necessarily being a detriment to their own company.
Mm-hmm. Mm-hmm. Well, and in a small town, that really is important because everybody knows, what everybody's doing and who's getting the best deal. And that's really nice. And it's really funny that banks that can't help their clients are sending them to you.
Yeah. And I'll be honest, I sent a really big one off to a local bank this week that I knew that they had a little bit of a better product. They were just,
Oh,
you know,
really?
they had a weird little niche and I hated to see it go away, but looking my guy in the eye, the right thing to do was to do that. So anyway, hopefully my managers or nobody listens to this radio cast.
Well,
But we're always going to do what's
you
right
were
for them.
doing what was best for your client, and that's what's great about you.
Well, sometimes.
So,
But
how long are you doing your coat drive?
oh, do you know what? It's kind of on the tail end now. I think we're delivering the last of the jackets today. But if you kind of look it up online, there's a couple of partners that put the thing together. I think a lot of it was Windermere and Channel 12, but they've been doing this for a couple of months, and I'm just a delivery guy. So we're just going to be taking some coats to some schools and just a couple hours. I don't think it's going to be forever today, but
Uh-huh. So you're
but
actually
when
dropping them off at the grammar schools?
yes, yeah.
Great.
Um, yeah, so that part's kind of fun. You don't get to interact with the kids at all, but if you see one wearing a coat around town, maybe that's somebody that donated a coat.
Yeah, well, and that's got to feel good. Well, we just have a few seconds. We're going to take another quick commercial break. We've been talking to Guy Giles of Mutual Mortgage. Local lender goes the extra mile and is willing to sit down and talk about all the different programs that you might qualify for and do what's best for you. So we'll be back with Guy Giles in a quick minute. Don't touch that dial. We'll be right back.
100%. Yeah.
So we got to take another quick break, folks. We're going to be right back with Guy Giles. Don't go away. Welcome back to the Real Estate Show, Southern Oregon. I'm Alice Lema. I'm a broker here in beautiful Southern Oregon with John L. Scott Real Estate. And we have the good fortune to be interviewing Guy Giles from Mutual Mortgage, one of our local lenders and a sponsor of the show. And he is on location today and calling in from the Coats for Kids drive. So we really appreciate you taking the time to talk with us, Guy.
Hey, nope. I'm glad to be here. If we can add some kind of value to somebody.
Oh, absolutely. Our listeners learn volumes every
I,
time you're on the show.
you know what I never thought about till right this second. I wonder if there's a way that they could email in any topics or questions that people want to talk about.
Oh,
We can
absolutely. Yeah,
we
yeah.
can
In
do
fact,
that.
Yeah, we'll encourage them ahead of time. Yeah,
I
that's
don't know.
great. That's great. We'll start that next time.
Well, we
Um,
talked a little bit about people that are selling a house that, maybe have a lot of equity in it since 2019, but then
yeah.
on the other end, with good credit and maybe not having to pay for expensive mortgage insurance, but there are some options for people that their credit might not be as good, with a little bit lower down payment, and that would be the FHA. So if you don't have a great credit score, um, the traditional mortgage insurance, like I was talking about on the loans earlier, they're on a sliding scale. So if you have a 650 credit score, you're going to be paying a lot for mortgage insurance. And if you have a 780 credit score, you're not going to be paying very much. But one thing that is nice about the FHA, and again, we just kind of tailor everybody to their own circumstances, but mortgage insurance is capped, and it's the same whether you have a 800 credit score or a 640 credit scores. If we can get an approval for you, that's the option, or a good way to go a lot of times, because you could literally be talking hundreds of dollars difference in how much you're paying for your mortgage insurance.
Wow, that's huge.
So there is definitely a place for the FHA, for the VA, for the conventional, or one of these what we call non-QM loans.
Yeah, what's
So
that?
the bank statement loans,
Oh,
the
okay.
DSCR loans. Then we talked a little bit about bank statement loans, but DSCR loans are kind of nice too, because that property, you can buy investment properties with it, and
What
with
does that DSR stand for?
it's no, great. You caught me on a Saturday morning,
Oh,
and the
I'm sorry.
acronym just like left my brain a second ago. But basically, your property is just qualifying for itself. Um, so if
Oh,
you don't
so
make
for
your
an
payments, the rents
investment.
on it, yeah,
Okay.
yeah, the rents are going to pay for it. And now it'll haunt me all weekend that I couldn't think of that acronym,
So
but I guess
instead
that's
of
not.
so do they do an appraisal on that loan?
Yes, yeah, yeah. So
Okay.
it's basically just if you have $3,000 worth of rents coming in and your payment's $2,000, they don't really have any reason to believe that you're not going to make the payment. And just if you think about it deeper than that, you're making a really good down payment for that investor. So if you default on that loan, A, they know that you've made the down payment for them, and B, they know that the rents are going to pay for
And
itself.
it
So
pencils.
yes. So
Yeah.
a lot of these, and that's another one that we're doing in-house. So
Oh,
we don't have to
really?
go out and broker that program either. So, even though we're owned by an insurance company, we are, pretty aggressive with our loan programs. And when I say aggressive, it's not um it's not loose lending. It's just both these programs make sense, and well, we're doing them. So I'm just excited that we have them in house now.
Well, and if an insurance company thinks it's a good idea, because insurance people understand risk, right? So
Yes.
maybe that's what gives them the fortitude to go out and really, like you said, be aggressive with helping people with these more business-like kinds of loans versus just purely residential. Because what you just said about being able to buy an investment property, a rental property that has tenants in it and pencils or will pencil, that's more of a business qualification than the regular, what's my credit score? What's my down payment? Right?
Yeah. Yeah. And it's helped a lot of people become investors that have saved a good down payment. And again, just sometimes it's less hassle. I found that a lot of
Oh,
really busy
really?
business people just don't. Oh yeah, there's a lot less that goes into that, and the bank statement loan for that matter. And the rates are not terrible on them. So sometimes it's just how are you gonna spend your time trying to get your CPA to put your taxes together really quick, or jump on this house that you found that's a really good deal right now.
Well, and those CPAs, God bless them, we need them, but sometimes
We
they are
need,
super
yeah,
busy and it takes a long time.
yes.
So,
I
yeah, real estate agents and lenders, they often hear, oh, it's the CPA, we need another week. That's pretty common, right?
Oh, I know. And that's just to get year before last taxes done. That's not even the tax year that we need. So,
Yeah,
you know,
yeah.
but
Well, that's kind of a joke, an inside joke among lenders and real estate agents. So,
yeah, we have a few of those. You know, another one is like, let's buy a house and then go on vacation. I think that's the
oh, you
biggest
mean
one for me.
spend the down
Or
payment?
change your job. You know, there's just things, you know, do's and don'ts that you should do.
Well,
But
you
if
know, we only
somebody,
have a few minutes left. Let's touch on that because we don't talk about that very much. What not to do during your escrow.
yeah, so it's kind of weird. Definitely during your escrow, you know, try not to do that. I actually had someone do that the day after they got in escrow last month, and
They did
we're,
which
you know, we
one?
figured they, well, they decided to switch jobs. Um,
Oh,
so we'll be closing. We're cleared to close for next week, but there are just some nuances that go with that. You know, if I have a nurse moving here from the Midwest and she has a job offer and it's non-contingent, meaning you don't have, you know, anything else to do on it, we can go off of what they are going to pay you for that. But if she starts her job, then we need pay stubs. So the what we call future income
oh,
is what we do with most people that are moving to town. Yeah. So they don't have to wait. So there are some ways to get around it. And maybe we should talk a little bit, you know, go deeper into some of that stuff next week. But you definitely, you know, as far as don'ts, you know, you don't want to go down if you're walking into Lowe's and they have some 0% financing on
right.
a new range that you
Don't
want for
buy,
your
but
new
yeah.
house. No, I've had them buy new cars. I've had pretty much everything happen, you know, in the middle of a home loan by now. But we have a little list that we email out at the beginning of the process to everybody, and it's like, don't do this, don't do that. But you know, we generally find a way through. But we have had people that have not qualified because, you know, they bought something that now is on their credit. You know, another thing that we ran into this week actually on one of Trent's loans was we were pretty much cleared to close, and we did a final little check on somebody's credit, and this was nothing that the borrower did wrong at all, but with all of the lawsuits and everything that's going on with the student loans, all of a sudden their income-based uh, repayment on their credit report switched to a deferred status. So now instead of showing a $200 payment on their student loan, it shows zero. So if it shows
Oh,
zero, we have to hit them with a whole other payment that was a lot higher than what they had before. And I think we found a way through it, but but anything can kind of bite you during the loan process. So that was something that happened in the middle of the process. It was nobody's fault necessarily. Um, you know, you have an administration that's trying to forgive student loans and the law that says they can't really. So the borrower just kind of got caught right in the middle of it. Nobody was doing anything wrong,
oh,
but
how unfortunate.
anyway, yeah, so like I said, I think we figured out a workaround for it, but that's actually something that happened because of some lawsuits to do with it. Yeah, that's going to be relatively new. I actually ran it by a couple other lenders to see if any of them had ran into that, and they had not. So we're the guinea pigs. Like I said, I think we worked our way through it. I'll know when I can get to my email, but anyway.
Yeah.
Lots of things to bite you in the middle of the loan. So definitely talk to your loan officer before you make any kind of financial moves at all.
Yeah. Well, and that's one of the good things about your team is you do email out that list very specifically, very early on. Don't don't go buy furniture, don't buy appliances, don't buy a car, don't quit your job because people just don't understand. But we'll talk more
Yeah.
about that on another episode because we could go on and on, right?
Yeah, there's lots of boogeymen there. So
Yeah. But it sounds like you found workarounds for most of them.
yeah, yeah. We
Okay.
usually once we get in contract, I haven't lost a deal that's in contract for a lot of years now. So
Yeah. So just a little stress.
yes, yeah, yeah. But it's still a fun job, you know, if we don't get a little bit creative. I wouldn't say boring. I could go for boring, but but
Well,
we've gotten good at fixing things.
Yeah, well, we appreciate you so much, Guy Giles Mutual Mortgage from the road during the Coats for Kids. Thank you so much, and please say thank you to your team.
Well, thank you, and have a nice weekend.
All right, goodbye, everybody.
And thanks. Bye-bye.